We may see a record close for the Dow Jones Industrial Average, and it's Technical Tuesday. And that's why we keep an eye on all these averages. And Rachel Dashiell's with us, Senior Manager, Trading Services at Charles Schwab. I haven't seen Rachel in a while. Good to see you, Rachel. And I'm glad you're taking a look at the S&P 500 for us today. What are you watching there?
Well, great to see you as well, Diane. You're right, it has been a bit, but with the S&P 500, obviously we've seen earnings season, tariffs, the government shutdown, and we've seen that the S&P has actually held up pretty well throughout all of that, really only pulling back roughly 4% from all-time highs. And now it looks like we're mostly out of the woods for a lot of those factors. And we even saw last Friday, it formed a bullish reversal candlestick right at the 50-day moving average, which has acted as that longer term support really since the April breakout. And we saw that bulls continued to buy the dip and price gapped back above its 20-day moving average, really putting the S&P right back into that rising channel to continue its trend on higher. And there's obviously been cracks in the surface, like weakening breath, volatility around the shutdown, tariffs, earnings season, all that. But the bulls haven't really seemed to care much and seem to have shrugged it off. And honestly, a tailwind that bulls may be looking for is a rally into the year end, with November statistically really being the strongest month of the year. And if the usual seasonal trends don't really play out, that may give traders a bigger signal that some other factor that they're not really expecting may be on the horizon.
And as I look, Rachel, I see, the advanced decline line, and market breadth seems to be improving. I mean, that's something that people were worried about. I mentioned that 10 of the 11 sectors have up arrows, and I see at least 3-to-1 up to down volume. So that's pretty good. And when I look at the market watch, like this hot chart that we look at, so many names in the green. Nvidia and Broadcom, yeah, those are lower, but many names from Walmart to Netflix to Microsoft, all in the green here today. Apple, AT&T, a variety. Let's take a look at Oklo, because we are waiting to hear from that company. Some of your thoughts there.
Yeah, you're right, Nicole. And it definitely speaks to the sector rotation that's taking place under the surface here. So the next one for Oklo, we've all seen has had a phenomenal run this year, scoring 1,000% move from yearly lows to highs. And you can see the market has just respected those Fibonacci retracement levels in this name. The trend stalled out at the 423.6% retracement, which is over quadrupling that initial basing pattern that it broke out from early this summer. And we all know that no trend can run forever. And we did see a bearish divergence in the RSI when price was making those new all-time highs. And we've seen a distribution looking pattern really taking place over the last month or so. And with that pattern, I drew a purple trend line that really served as the neckline of a slanted head and shoulders bearish reversal pattern that just completed last week. And now we kind of see price trying to retrace back to that level, which also kind of coincides with the 50-day moving average and some of our resistance levels to the upside. So some levels to watch in this would be 126 to the upside there with the next Fibonacci, and 100 to the downside. But obviously, got to reclaim that 50-day moving average first as well.
Understood. Last but not least, before I let you go, could you take a peek there at Expedia for us, Rachel?
Of course. So Expedia started the year with a familiar bullish basing or bull-shaped pattern that we saw in many different stocks, followed by a few months of consolidation as somewhat of a breather for price before its next move. And I'll mention this too. I know it's not shown on the chart, but if folks zoom out to a 5-year weekly chart, they'll see a much larger cup and handle pattern that just completed as of August, which is a bullish setup for this name in the long term. And we just had an analyst upgrade yesterday to 271. We know a lot of times these analysts tend to chase price, which is something that we're kind of seeing now with that bullish breakaway gap on Friday, where price broke above prior resistance, kind of finding itself around that next Fibonacci retracement zone. And it's continued that move higher with strong momentum, reaching overbought levels and more than doubling in price since its yearly low. So it remains a name to watch. But traders may look for resistance and possible profit taking around that next level of 285 or so, which is the 200%. And then on the downside, right around 256 or so. And if that level breaks, the breakaway gap from Friday will act as that next level of support.
Understood. I mean, and you noted, look at the bullish trend that it has there. And I saw that Argus has a $300 target. Citigroup has a target at 281. Expedia has been rising and outperforming some of its peers. It's great to see you, Rachel. Thank you so much. Rachel Dashiell taking a look at the S&P and also Oklo and Expedia. Rachel Dashiell, Senior Manager, Trading Services at Charles Schwab.